Hi, welcome to Neppy Invest. Today, episode 3 of my series 15 ASX stocks that I'm watching this month, October 20, because it is quarterly cash flow season. This comes 4 times a year, and October is one of those times. So, this is when small companies have to release their quarterly cash flow statements for the market and for their shareholders and for investors like me, because I find that sort of thing quite exciting. So had a little bit of an adjustment today because the first quarterly cash flow statement has been released today from Self-Wealth. They typically release it really early. I think they released the last one on the 6th of July. So I should have known they might have released it early, but I was going to do Self-Wealth in my next video, my next group of videos. But today I've just brought it forward, and then I was going to do Obsidian, and I've moved that to the next group. So the 3 stocks I'll be doing today is Quickstep, Self-Wealth, and 5G Networks. Let's not confuse that with 5G. This is a company's nothing to do with 5G, and I think some investors are confused by that. So the first company I'll be looking at is Quickstep. So they have a manufacturer of stuff for defense and commercial aerospace, that sort of thing. So, for instance, their two of the major customers are Boeing and Lockheed Martin. And I've got their quarterly cash flow receipts going back all the way back to October 13. So what I've done is from the quarterly cash flow statements, I was looking at receipts. So one of the main things I look for is an upward trend in cash receipts. If we don't see that, that is a concern for me and a red flag. And here with Quickstep, we do see a good uptrend for cash receipts going all the way back to October 13. So we saw only $3.8 million there, and now it's up to 24.5. The next thing I like to see is them, even though they're increasing those cash receipts, we need to see those margins really getting up there, increasing, because that's how you get increasing operating cash flow. We're not seeing that yet with Quickstep. They could be spending more money in R&D, that sort of thing, which could sort of bring that down. But at the moment, the fact that they're almost got, $82.3 million in revenue, but their operating cash flow is only $177,000. Either we'd like to do a little bit more research to see why that is and if they can improve that going forward. So those margins are quite low. And a market cap of 55.6 million. So even the market's not that excited with Quickstep because price of sales is almost 0.5, which is quite low. So market cap is significantly less than revenue at the moment. They have a little bit of debt too, about $25 million in debt. So at the moment, I'm excited with the increase in cash receipts, but if we're starting to see, if we were getting an increase in operating cash flow, I think undoubtedly the market cap for QHL would be significantly greater than it is. And we can see how the market's just not in love with QHL Quickstep during the past year. Just looking at that chart, it's sort of in a downward slope, downward trend through the last year. So it's gone from a price of almost 16 cents at its high about a year ago, now down to 7.8 cents. So it's halved in value. You can see even the volume in right at the bottom there. Not a lot coming into the market, no increase in volume. And once I'll show you Self-Wealth, you can just see the massive increase in volume in the last 6 months or so. The previous cash flow report in July, that was positive. We did see operating cash flow increase to 1.7. This is just looking at operating cash flow, but they did spend a fair bit of money in property or CapEx, capital expenditure, which is property, plants and equipment, that sort of thing. So that was a little bit of a positive sign, the last quarterly cash flow. So I'd like to see that continue and that sort of trend. And then once we see that continue in the financials, I'd like to see the market start to get more exciting, a little bit more volume come in before I'm interested in buying it. But it's still on my watch list just because of last quarter. Next company is 5GN or 5G Networks. Some people think this is something to do with 5G. The new broadband, whatever it is. But they just run their own high-speed data network, and they own and operate some data centers in Melbourne, Sydney, Adelaide. It's probably even though it's not as exciting, that's probably the area I'm a little bit more excited in, because that how we handle data, look at data and analyze data is undergoing a bit of a revolution. And the question I have also is we are starting to see data warehouses in the cloud, whether that's going to affect the data centers, the sort of the data centers we have here with 5G. And looking back at cash receipts, was a holder back in 2018. I did get excited because we saw some fairly significant growth from July 2018 all the way to January 2019, and the market got really excited too. So we went from 1.6 million to $14.3 million in cash receipts. Unfortunately, since then, it's just been leveling off. And that's not something I like to see, is just leveling off. In fact, it's come down a bit. July 20 was actually the lowest cash receipts since October 18. The market sort of ignored that. I haven't ignored that. I did sell out. Not a lot of shares on issue, only 86.7. Share price last time I looked was $1.58. There was some sort of acquisition they were getting or looking at, and they were in a bit of competition with this acquisition. There was a company called used to be called Melbourne IT, and they went through a few transitions, and now they're called Web Central. Share price has gone from something like $3 all the way to 10 cents. It's this company that 5G is looking at buying. So either the company's really bad and it's going to be a bad acquisition, or they're buying something quite cheaply. So market cap of 137 million. Revenue has gone backwards from the previous year, but still 49.3 million. And good operating cash flow, 7.5 million there. So good operating cash flow, that's quite good. But they've actually increased that operating cash flow, even though the revenues come back, probably because they've decreased some costs. I mentioned the market's got a little bit excited the last 6 months or so with 5G. And you can see increasing volume, and the share price from May or so has gone through a pretty good uptrend. Went from about 90 cents all the way up to $2.40. So it's a good profits for those holding. But when they announced the possible acquisition, the share price was quite high, and we've seen that share price really come back a bit from $2.40 all the way to $1.58. So I don't think the market's all that keen, but it's come back to the moving average, the 100-day moving average, which can be at times a level of support. The previous cash flow statement, they did have, again, their lowest cash receipts for 2 years or so, 12.5 million, but they were cash flow positive in operating activities to the tune of 2.6. So nothing too bad there, so quite good. So the main reason I'll be looking at 5G, and I'd like to see that receipts from customers start to increase. My biggest concern is they've got no organic growth, hence why their cash receipts is leveling off and even coming down. And they've just rushed into an acquisition hoping that's going to increase their cash receipts. I'm not the biggest fan of management just focusing solely on revenue. Sometimes that's a good thing, especially if a company's just started out. But just to solely focus on that, I think in long term is not the best thing. Now we get to Self-Wealth, SWF. Very simple. What this company does, they're just a share trading platform. Just for disclosure, I am actually a Self-Wealth user. Was a CommSec. Now I've transitioned to Self-Wealth just because their fees are lower. I have no doubt in the future we'll have free trading platforms. So this is a fee trading platform. I have no doubt it's going to be a fee-free trading platforms in the future. We've already seen it in America, and that will no doubt come here in the future. And if you're working for CommSec, NabTrade, or any of those big ones, and you still have $20 fees per trade, it's going to change. And whether you're going to be part of the revolution or not, it's up to you. You might be left behind if you don't change with it. It's going to happen, without doubt. But anyway, Self-Wealth. You can see the cash receipts has just boomed, especially during COVID-19. So a lot of we sold a lot of recreational retail traders coming into the market during COVID-19. And Self-Wealth, you definitely see that just in their trading and their revenues. Not only that, we saw a lot more trading, and that's also, we see that in the revenues. So there was good growth there, not a lot to begin with in 2018, start of 2019, just general growth. But then, April 20 and July 20, we saw exponential growth those two quarters. And that means, in fact, their revenues have gone up, and the cash flow, operating cash flow, has gone positive, even though for the whole year we did see negative 147. Market cap's 136 million. So it is up there in valuation. So there are a few things I have to question about the future of Self-Wealth, just because I do believe fee-free platforms will come into existence very soon for the majority of Australians. The market has got very excited about Self-Wealth over the past 6 months since COVID-19, where we saw it get down to 10 cents. Volume's gone up. Volume's starting to decrease since July a little bit. So we're seeing volume come down. Share price still rising a little bit, but it's got to as high as 80 cents and as low as about 45 cents. I was almost going to buy at around 45 cents or so. I just did not bite the bullet. Just still a little bit unsure about the future of this Self-Wealth, and they're still paying $10. I think they're going to have to adjust with that in the future. And the previous July cash flow, they did have operating cash flow positive 809,000, $4.2 million in receipts. So they did release their new one today, their new quarterly cash flows. I'll have a look at it and probably even maybe release a video on it, a sole video for Self-Wealth, because it is the first one to be released this October. So that's it for part 3. Part 4, I'll be looking at Cidian. That's the one I was supposed to do today. I'll also look at MCS Security, code MCG. This is priced at something like $2 or $3 million. It's very low valued. It's a very low margin business, so you can just see their security. So security is actual physical security, having bodies. Say if you go to a stadium, or the sort of the people who are providing securities for those sort of things. Very low margins, so they're valued very low. But if they do get any sort of cash flow positive trend, where this could be a 20-30 bagger easily, and if they do some acquisitions, that sort of thing, this could be a massive multi-bagger in the future. And the other one is Westar Industrial, WSI. We're starting to see their cash flows increase, and they're still quite attractively valued. So that's all for today. That's part 4. So I've just gone through part 3, and if you have any questions, leave it in the comments. Subscribe, blah, blah, blah. I'm not a professional, so don't take anything I say as advice. I'm just doing this for my own benefit, and hopefully for your benefit too, as entertainment. That's all for today. See ya.